We got 3 companies now controlling 22% of the entire stock market. Last time valuations looked like this was right before the dot-com crash back in 2000. And while we've got the S&P 500 still hitting record highs, gold just hit 4,100. We've also got credit card delinquency spiking across all income levels, and over 1,500 CEOs have stepped down this year, the most ever recorded. So what's actually happening out there? This is market signals for November 10th, 2025. It's a quick look at what's really moving across the markets right now. Today we're covering the AI bubble warning in the S&P 500, Bitcoin's drop and rebound, key updates on Hedera, Quant, and Ripple, why gold above 4,000 still matters, and the real world pressure building from car repos to CEO exits. Timestamps are down below if you want to just jump around. And a quick note, I'm not a financial advisor. This isn't financial advice. I'm just sharing the research I do on my own each week. Use it to think for yourself. If you've seen my deep dives on Quant, Hedera, and Ripple, and also I've got a big avalanche video coming shortly, but since I'm already studying the markets every week as it is, I thought I might as well share what I'm seeing in real time. That's what I've created market signals for. Just short, useful updates packed with as much insight as I could possibly give you all. If you value this kind of research-based content, be sure to hit the like button. It helps tell YouTube people still care about solid analysis. When I'm looking at the S&P 500, it's still near its record highs. We're over 6,800 now. The problem is, though, the valuations are massively stretched. The Shiller PE ratio, or the CAPE, which is just cyclically adjusted price-earnings ratio, is right around 39.7 as of Monday today, November 10th. This is more than double the mean median, which we've got a mean 17.3 and a median 16. But I mean, well over double. And the last time there was a Shiller PE ratio like this was back in October of 99. It's only been over 40 that one period. And now we're knocking on 40 yet again. And this was happening very shortly before the dot-com crashed. And when you look at the concentration in the markets, the total market cap right now for S&P 500, 56.85 trillion. That is 22% of that market cap is made up with just 3 companies. So you've got Nvidia, which is currently at 4.84 trillion right here. You've got Apple, which is at 3.98 trillion. And you've got Microsoft at 3.76 trillion. And what's happening, just like back in the dot-com period, people did not know exactly what was going to come of the internet. They didn't know what to expect yet. So there was all these, some were true, some were correct, but there was a lot of predictions that were a little bit overexcited. And that pumped up the market to what was seen during the dot-com bubble. And I believe the same thing is happening right now. Right now, though, it's just the AI bubble. There's so much speculation about what's going to happen with AI. And there's a lot of people that have some correct predictions, but I also think there's some excessively exuberant expectations also. And that's what's been driving up all these valuations in the market recently. When you've got a huge percentage of the entire market tied up in only 3 companies, this is a problem, and it won't take much to pull it down. It won't take much of a domino falling for it to quickly start deflating. We look over at Bitcoin. It's trading right now at 105,000, 106,000. Last Friday on the 7th of November, it had dipped below 100,000, which hasn't happened in quite a few months. But there was also 6 straight days of ETF outflows with Bitcoin. And that was about 2.9 billion got pulled out of those ETFs over the past week. But I think we haven't really seen any kind of panic selling yet. It's mostly just investors taking profits because it actually peaked around 126. But Bitcoin has recently been trading in the mid 120,000 range, in the 125 range. Despite the big drop, you look at the past year, I mean, at 105 today. A year ago, it was at about a little over 80,000. So it's up more than 20% in the past year. I see this right now as just a small pullback. with the positioning of everything in the markets, it's hard to know exactly how sturdy of ground that is. Okay, HBAR recently, it had peaked in July, it had peaked in the 30-cent range, and then it's been trading more recently in the 15 to 20-cent range. We're at about 19 cents right now. Despite all of this crazy action, I mean, it's gone down more than 30% since the summer. That doesn't look very good on the surface, but behind the scenes, there's some good things going on with both the ETFs. You've got Canary Capital. They launched the spot HBAR ETF that was announced a little over a week ago. And also you've got, interestingly, because of all of this pullback with Bitcoin, despite that big launch with the spot HBAR, there was zero. That it was literally reported in this article that there was zero inflows. So we'll see, but all in, I see this as good news. And also on the 12th, November 12th, this Wednesday, just 2 days from now, we've got the SEC deadline to announce the decision on the Grayscale HBAR ETF. If that goes through, I expect a boost with HBAR. Ultimately, we'll just have to see. On the Hedera company side, you've also got Arrow Electronics had recently, just this summer, joined the Hedera Council. The thing I find interesting about Hedera is that they're not chasing hype. They're building quietly like the plumbing under your house that is keeping everything moving. You don't see it, but there's a lot of value there. And currently, they're a centralized network with a governing council running everything. But longer term, their plan is to go fully decentralized. And I think there's going to be some interesting developments as that whole multi-year process plays itself out. Also, recently, we've had a lot of movement with QNT, with Quant. It had been up over peak at, let's see, we got, in the mid 130s, about 135. And then more recently, it's dropped down today at 85, and it had gone below 75 just a few days ago. But again, you've got a big swing of price, but behind the scenes, there's a lot of promising stuff going on. You've got, just a few weeks ago, they announced QuantNet, and QuantNet lets banks actually move money between old systems like Swift and new blockchain networks in real time, not just talk between them. 2 weeks later, on Quant's 10-year anniversary, they launched Quant Fusion, which lets digital assets work across multiple blockchains without the risky bridges or not even having to wrap up tokens. Together, all of this moves Quant from only connecting systems to actually running how digital money is settling. It's a big step toward adoption by banks and governments. So I think this is going to be very interesting playing forward, regardless of what in the short term the markets are doing. Also, we got XRP has been holding kind of crazy like everything else, but you've got going in the low twos down to $2.20, and back this summer it was in the $3.50 range, and now we're somewhere in between there, $2.50. But yet again, we've got Ripple having a lot of awesome stuff going on behind the scenes. They just raised $500 million, and that puts their company valuation at $40 billion. They said they didn't even need the money. They're already profitable, but the purpose of it was they wanted to form some better connections. They got some really large firms, Fortress, Citadel Securities, Galaxy Digital, and the purpose is to help expand Ripple's reach in traditional finance. Lately, they've had 6 acquisitions in the past 2 years. They're going beyond payments. They're moving into crypto custody, prime brokerage, treasury tools. And the goal here is that for banks, helping banks store and move digital assets throughout the Ripple network. And also, they just announced, this was 5th of November, so just 5 days ago, they announced that they're partnering with MasterCard, Gemini, and WebBank to bring the RLUSD stablecoin, which is just their dollar-backed stablecoin, into credit card payments, which would allow people to pay using RLUSD. And although RLUSD isn't new, It's about a year old, but this is a first, and this will be very interesting. And this is the sort of stuff here that I think is going to be paving the way for commonplace crypto credit cards. I know there's some out there with Coinbase has one. I'm sure there's others as well, but that's one I'm familiar with. But I think these types of things are going to be good to get banks used to these sorts of products. Ultimately, all of this with these kind of networks with a very traditional card company it shows that this technology is becoming real for the financial infrastructure where we're finally connecting blockchain and traditional finance. When you look at both of these things together with both Ripple and Quant, they're tackling two sides of the same problem. Ripple is moving the money and Quant is connecting networks. Both of them are building foundations for the steps that I personally believe are going to follow in digital finance. Right here, this is 3 projects that a lot of people are not even looking at. I really like digging into these things that other people may be overlooking. And if this is the sort of stuff you'd like to see on a weekly basis, be sure to subscribe so you don't miss the next market signal. Now, this next signal is an interesting one, and there's a few of them. Caught me off guard a bit. Pretty interesting. First, we've got gold has been skyrocketing. It's trading over 4,100 per ounce, almost to record highs. And central banks have been buying gold up like crazy for many years now. If you look here, like this 10-year picture, back in 2014, this is all the central banks, what's being publicly reported. They would be buying in the 300 to 600 ton range per year. And that stayed pretty consistent. And then all of a sudden in 2022, it's been over 1,000 tons per year across central banks. 2022, they bought over 1,000. 23, same. 2024, same. And now 2025, they're on target to purchase somewhere around 900 tons. And this will still be one of the biggest totals ever recorded. Gold has been up. Let me pull up the chart. Gold has been up about 55%. As of a year ago, it was in the 2,600 range. So that's approximately 55%. When I see gold being this strong, and I also see central banks buying it up, they've actually been net buyers of gold consistently since the Great Recession. Ever since the Great Recession, central banks have been net buyers of gold. So that's all going all the way back. For the last 15 years, central banks have been net buyers of gold. And years prior to that, for decades, they were net sellers of gold. So they've been stockpiling gold ever since the Great Recession, and that number has been accelerating in recent years. I see that, plus the crazy peaks with the Shiller PE ratio hitting almost .com era levels and just keep blowing past old records, recent year records. I see all of this as a warning sign of where the market is. This next one is one of my favorite indicators. It's been tracked for a long time, since after the .com bubble burst in the early 2000s. Challenger Gray and Christmas has been tracking these CEO numbers. And most recently, you've had 1,504 CEOs stepping down this year, the most they've ever recorded since 2002. This is not normal. And when you look at what's happening to everyday people, you see why boards are getting nervous, because when people start getting strapped, they're going to start trying to shift things around. So people will start racking up more money on interest on credit cards. And what we start having now, we are having broad rises. The Federal Reserve Bank of St. Louis put this article out. They were talking about, just before this summer, they were talking about how credit card delinquencies are surging. It's been climbing since 2021. It's up more than 70% in high income areas and over 50% in lower income areas. Even 90 days, even people that are 90 days past due are up nearly 80%. This is hitting levels close to what we saw back in the 2008 crisis. Another interesting one. So people depend on their cars for their job. They depend on their cars for work. They depend on their cars to go buy groceries, take their kids places, do all of these things. The last thing, people will shuffle money over to the credit cards. The last thing people want to give up on is their car, because for most people, when that car gets taken, they're in serious trouble. So this is kind of like the final nail in the coffin in a lot of cases. And we are seeing record high car repossessions. And about 7.5 million vehicle repossession orders have been filed this year in 2025. And the projections are up to 10.5 million by the end of 2025. Again, highest since 2009, the Great Recession. And roughly about 6.5% of the subprime borrowers are now over 60 days late. This is also a 30-year high. So think about it, 30 years ago, we're in 2025. So since 1995, we are seeing the highest level of this. And I think what's happening is you've got these numbers with delinquencies. I think the CEOs are just seeing the writing on the wall. And despite the fact in these reports, the CEO exits, a lot of them are saying that they're just retiring. But I think that they start, and probably for sure, some of them are retiring, but they're starting to see all this behind the scenes. You've got rising debt stress, car repos, CEO turnover, all of this financial strain, I think, is beginning to spread from Main Street America to Wall Street, and they're seeing the writing on the wall. The big picture here, you got S&P 500, it's stretched thin. There's massive AI hype. You got all these companies with absurdly high price earnings ratios. You've got some kind of crazy price action recently, which is typical, but you've got crypto kind of all over the place. Bitcoin, HBAR, Quant, XRP, they're going all over. But the thing that I see ultimately promising in all of this is that there's a lot of good stuff going on behind the scenes. Even what I'm saying about we're in an AI bubble, there's a lot of amazing stuff going on with AI. I personally use AI, and I think there's going to be a lot of benefits to society with what's going on with AI. I think that we are in an AI bubble, though. It's like back in the .com era, there was exciting things being planned for what the internet was going to do. And a lot of people got overblown about what was really going to happen. They started just thinking nothing was impossible. And they just pushed those valuations to crazy high levels. And I think that's happening right now with AI. And a lot of good stuff is going to happen, I believe, over the coming years. And I think maybe some bad things will happen, but I think ultimately growth requires some things fade away. It's like cars put a lot of wagon wheel repair shops out of business, and they probably put a lot of horse-drawn carriage sellers out of business. But things go away, new things come to replace it. And ultimately, I do think these crazy valuations could cause some rough times in the nearer terms, next few years. But I think what is going to come out of it is a pretty exciting, and I think there's going to be a lot of possibilities. And ultimately, with all of it, I don't know what's exactly how anything's going to play out. I'm not predicting the future. I'm just looking into what the data shows. And if there's anything specific about any of this that's interesting to any of you watching this video right now, I definitely would like to know. If you could put it in the comments. I literally read every single comment, and I reply to, I don't know that I've ever missed replying to a single comment yet, but I will definitely read your comments. So if there's something that you would like me to go into, I really love digging into this stuff. So put it in there. And next week, I'm definitely gonna be covering what goes on with this whole SEC announcement with the grayscale ETF for HBAR. I'm gonna have that all in my second episode. Ultimately, I'm hoping to help keep all you informed. And my best thing to say is everyone needs to stay informed, do your research, stay patient, stay grounded, And if you want to go deeper on any of the projects I was just talking about, especially Quant or Hedera, YouTube is going to recommend one of my deep dives right here. And it breaks down exactly how these networks actually work. And those are the type of high production deep dives that you can expect a lot more of in the future. So stay informed, stay patient. I'll see you then.